love the channel and find it useful in becoming a happy retiree. Subscribe today.
Maybe you've just been back and forth about, hey, should we do this or should we do that when it comes to some sort of financial decision, whether maybe it's investment, maybe it's Social Security related, maybe it has to do with a pension or some sort of lump sum rollover, or has to do with a 401k or 403b or the thrift, TSP, which is the thrift savings plan. There's a lot of, it's almost an infinite number of questions when it comes to planning for retirement. There are so many variables: your age, your risk tolerance, your needs, your goals, your wants, inflation, not inflation, how conservative or aggressive you might be. And once you start introducing so many variables, let's call it a dozen or more ultra important variables, then you get an infinite amount of complexity. There almost an infinite amount of financial directions or ways you could go, and it just depends on the person, depends on the goals. And we're here to try to help set you in the right direction, at least give you an objective view on putting your best financial foot forward so that you can have full financial independence, retire when you want to. Of course, that's been the theme for many, many years: income investing. So how can I have the savings that I've done for 30 and 40 years, then produce a steady stream of income, dividends that come from stocks, interest that comes from various forms of fixed income or bonds, and then distributions that come from energy pipeline companies and closed-end funds and REITs, real estate investment trusts. Just put all those together and you have this complex world that gets pretty straightforward. Cash flow, that's it. And the cash flow comes from a lot of places: dividends, interest, distributions. There's three kind of main core areas that you get cash flow from. But the real equation for investing, total return, TR equals G plus I, growth plus income. That's it. So if you go backwards and just figure out, well, what are we really trying to solve for? We're trying to solve for total return. Everyone. That's why we're investing. And the steady piece of that equation is not the growth part, because we can have years like this year where markets have been already up 10% and then are already down 12% from where we were. And then we go back and forth and there's this great undulation. And we might have a 10 or 20% up year, and that's great, like we did in 2017. And then we may have a 10 or 15% negative year from a price perspective. Well, the reality here is that the income part of that very simple equation, growth plus income, that piece at least is steady. The income piece, if you have a portfolio that generates, let's call it 3% or 3.5% just from cash flow, dividends and interest, maybe it goes all the way to 4% as we're finding A, interest rates are going higher, B, because we've had a correction in so many different areas of the stock market, including energy to some extent, which is our kind of a main theme and topic today. Now you're finding companies that are yielding 3.5%, and it's not as hard to find them because their prices have dropped. We're finding companies at 4%, 4.5%. It makes income investing actually a little bit easier now that interest rates are higher because of the Federal Reserve and the bond market pushing yields higher. And then on the stock side, higher percentage dividend yields because prices have gone lower during this really mild so far correction, but frustrating nonetheless. So put all that together, and dividends, interest, and distributions, they equal cash flow. And that's a big part of that total return equation. It's just the steady or more predictable piece in a very or otherwise unpredictable world.
Hi, I'm Wes Moss, and thanks for taking a minute to hear about what's so different about my new book, You Can Retire Sooner Than You Think. So unlike other retirement books, this book will give you a step-by-step guide, whether you're in your 20s or 30s or 40s or 50s, to learn from what these successful and happy retirees did to get there. I hope you enjoy the book, but more importantly, I know that it'll help you retire sooner than you think.